My guest today is Matthew Mathison, co-founder and managing partner of MBL Partners, where they build, invest in, own, and advise companies in their pursuit to drive long-term value. Thanks a lot for coming to the podcast, Matthew.
Mick, thanks for having me. I'm really excited to be on.
You've had an incredibly diverse career: entrepreneur, investor, operator, and even whistleblower. Where did it all start? Please share a bit about your background, and let's maybe start with a bang. If you had a big one defining moment that shaped your approach to business, what would it be and why?
Sure. Well, let's start with the bang question, and then I'll back into my background and I'll give you a little bit about myself. So, one defining moment. It's such an interesting question because there's so many, but one that really kind of sits in my soul, so to speak, was in the first 2 weeks after I had launched my own long-short equity hedge fund. I was sitting in my little office in Manhattan. I had launched my fund. I thought I had arrived. It was a big dream of mine to run my own equity hedge fund. Everything was off and running. And one of the first positions that I bought, I went long a position in a Chinese mobile app company called Qihoo 360. And for those that are in the tech world, or from decades ago, they might know this one. It ended up becoming a massively big company, and I had bought this. It was the month of April. This was the season where all the companies had to file their annual reports with the SEC. For Chinese companies, that was the Form 20F, and I had bought a decent sized position. And there was a lot of concern that this company would not be able to file its 20F, which would have been a huge problem for the company. And I had my own research. I had my own conviction. I felt like the company was going to be fine. And I felt like it was just mispriced, both long-term and short-term. And I remember it was a Tuesday afternoon, and I got a text message from a colleague who was also running a fund. He was a fund manager, someone that I respected. And he said, "Hey, I'm hearing that the Muddy Waters guys are telling people that Qihoo 360 is going to miss their filing deadline and they're going to file an extension." And so I didn't believe that. But it was my first month, and it's so critical to get off to a good start when you're launching a new fund. And I decided to sell this long position because I didn't want the noise of it all. Didn't think of any. I was off to a good start, and I just didn't want to take on the added risk with this potential black or white outcome. So I sold my long position right before the end of the day, went home, didn't think anything of it. The next morning, I woke up and Qihoo 360 had filed its 20F, and the stock was ripping. I mean, the stock was up 30%, and it just killed me because I had a position, and that would have really got me off to the right track. And the defining moment that I'm getting to is I immediately told my wife and kids, I got to go. I literally got to get to the office. I took the subway, went into my office, and I literally started buying the stock back, the position that I had sold, in pre-market hours. So the market hadn't even opened in pre-market hours, and the stock was ripping, and I was paying up, 30% based on what I had just sold the night before, because I was just so emotionally sad that I had missed this win. And a long story short, buying it up 30% pre-market's never a good thing to do. It was an emotional, irrational decision. I ended up losing money, trading out of it. The month ended up fine. I think I was down 50 or 60 basis points, really, as a result of this. It wasn't catastrophic at all, but that defining moment, it wasn't that I decided to risk manage and sell the long position. It was my reaction was just so emotional. I let the emotion take a bad outcome and make it worse. And that was a really defining moment. It's one that I look back on all the time. Really, we make decisions all the time as business owners, right? And Sometimes they're good decisions. Sometimes they're bad decisions. Sometimes luck or timing goes for you. Sometimes it goes against you. But it's really how you react to those things that matters. It's not the actual decision. It wasn't that big of a deal that I had sold that position and missed out. It was that I decided to stupidly run in and go buy the position back. That cost me. It wasn't the initial decision. And so that was the defining moment. In terms of my background, obviously I worked on Wall Street. I did about everything you can do on the buy side and sell side for many years. I was very entrepreneurial throughout that whole process. And worked for big companies like Goldman Sachs, and also started my own research and trading company from scratch and everything in between. And so I had a Wall Street career. I left Wall Street. I went on the private side about 13 years ago and, have been really investing in, advising and working on, companies that weren't public now, for the better part of the last 13 years, which led to, launching MBL Partners and kind of my own investment group, HoldCo, so to speak, that we can talk later about. But that's a little bit about my background.
Mm-hmm. Maybe we can talk a little bit about the long short equity hedge fund. How old were you back then, and how did you put it all together? And what was the decision why did you decide to pursue this opportunity?
So I started my career on Wall Street on the sell side. I was an equity research salesperson for Goldman Sachs in San Francisco during the height of the dot-com bubble, right? So kind of the initial technology buzz phase of the world. And I was right in the center of it on the sell side. So I was obviously working for Goldman Sachs and selling both their research, but the biggest part of our job was to really sell their IPOs and their secondaries for these tech companies. So I loved technology. I loved stocks. I loved finding hidden gems. I loved kind of being contrarian in that regard. And I did that for a while and then ended up launching my own research trading company with another partner called Hedge Partners, very focused on technology, very focused on really doing grassroots, kick the tires type of research to try and find out information and fundamentals that would fundamentally help a stock picker make a good investment decision with public investing. And in that process, I started to gain a lot of conviction that, man, if I'm good at my job of helping a fund manager make an investment decision, at some point I should ultimately take that value proposition and invest for myself or for my own capital or for my own fund, which led to this dream and this vision that eventually I would want to kind of launch my own hedge fund. And so again, I worked at Goldman Sachs for about 4 years. I did Hedge Partners for the better part of 9 years. And it was towards the tail end of that we ended up launching our own RIA, which then led to me managing money in a separate account manner, gaining a lot of conviction on an investment thesis that then I took to launching my own hedge fund. So I was mid-30s by the time that I launched my own hedge fund, and it was great. It was a dream come true, and also just learned a ton about running a business, right? By going through that, as opposed to just investing in businesses, especially public ones. And again, I have the entrepreneurial, kick that I can't get rid of. And so, that really led to, having me start many other businesses and kind of join the private side of that, where I can do it over and over again.
So what about the life after this hedge fund? What was this period, or what was did you take some time off, or how was this process for you? Because you were pretty much like changing a career. Yeah,
it's interesting. While I was running a hedge fund, one of the companies that I ended up investing in was a company called NQ Mobile. It was a highly controversial company. It's a Chinese mobile security and mobile platform company based in Beijing. They had their international offices, and international to them was the rest of the world outside of China. They had their international offices in Dallas. They were doing some really interesting things. They were caught up at the time. They actually went public at the time when many Chinese companies were kind of getting caught up in, oh, they're frauds, they're black boxes, we can't trust them, we can't believe them. There was a pretty big blow up. Sino-Forest was a big Chinese company that went public that ended up being delisted. And these guys went public right in that window. And so there was a lot of controversy around it. But because of that, the valuations were insanely discounted. And I saw a lot of upside. And so I actually, at my hedge fund, started to build a long position in this company, got to know the company, and they ultimately recruited me to come run their capital markets effort, which really was a dual role. There was an investor relations component to it, but it was more about, hey, how do we kind of get past the muck of this kind of this feeling that somehow we're tied to, Chinese negative fraud, black box. We don't trust it. It had its own kind of short attacks at the time that it was trying to go public, et cetera. So I owned the company and I knew the company well, and they recruited me. And it was just one of those things, Mick, where I just said, man, if I'm right on this with this role that they're offering me, it's just one of those chances that I'm not going to pass up. And so I ended up moving my family from New York. I returned all my capital to my investors in the hedge fund. And it's never a horrible thing when you're returning money to investors and it's a positive, as opposed to performance. It ended up being fine for the investors. Everyone was whole. And I moved my family to Dallas, which was the NQ Mobile's kind of international headquarters, to be with the team, and started this process. And, I can remember the stock was around $3 a share. It had a couple $100 million market cap when I joined. And I started this campaign to bring transparency and visibility to what they were doing and how they were doing it. We got very active with our investors, and the company themselves were starting to do some really interesting things, expanding their reach beyond just their core mobile security business and doing some cool things, which we can talk about. And in 3 short months, the stock went from 3 to 25. And the market cap went from a couple $100 million to a couple billion. And it was, oh my gosh, this was a home run move. And, everyone was, I was very much excited about what was happening. And at the peak of this, Muddy Waters actually came out with a report against NQ Mobile, and it kicked off just this couple of year process of just intense pressure and stress and what to do and how to do it. And, dealing with the fallout of that was just such a learning experience for me. But that's how I came to NQ Mobile, and that's how I left the Wall Street world to join the private side. Even though NQ Mobile was public at the time, it was a totally different role. But I just saw a chance to make a splash and make a home run, and I took it. And it definitely didn't work out the way I expected, but it was still incredibly invigorating to do so.
Let's a little bit talk about this, because when I was doing the research, I asked from you as well, what would be some of the topics you would like to discuss and some of the stories you'd be happy to share. NG Mobile was one of them, and you said that this time had so many good stories, lessons, Hollywood type events, and eventual financial disaster. So tell me, what happened, what was going on, and how was this whole period for you, and what were the good stories and lessons?
To make a long story very short, and I'll get into some of the stories around it. This company that had gone from a couple $100 million in market cap to a few billion, and had very promising growth aspects and prospects, which I can kind of uncover. I mean, NQ Mobile actually was the first public company to roll out what is now TikTok. They had this whole this social live video platform. And I remember talking to, investors in the United States, and they had this doesn't make any sense. Who's going to pay for this and all that? And obviously TikTok has proven that it's massive. These guys, NQ Mobile had it first. They were also very strong into the autonomous and smart car market. I mean, they had some incredible products and services, and they were early on many of these important trends. And yet, when Muddy Waters came out with their attack, the stock got hit, stock got cut in half. It ended up recovering most of that, then getting cut in half again. It just kicked off this long journey where ultimately I gained kind of, a lot of conviction around what kind of makes up good corporate governance, what makes up bad corporate governance, what's a good board and the independence of boards versus what's not a good board. And ultimately, I believe all entrepreneurs and all businesses go through moments of intense scrutiny and pressure. Sometimes that's from regulatory things. Sometimes that's from rule changes. Sometimes that's from bad acts. Sometimes that's just from competition. And most companies go through these moments. It's really how you deal with them and how you kind of work through those difficult moments that's going to set you apart. NQ Mobile ultimately, because of a board of directors that was unwilling to take out kind of the chairman and the owner who needed to go because they were unwilling to do that, it ended up leaving, just full financial ruin. I mean, the company was delisted and most of the assets, while didn't disappear, the United States and kind of other shareholders weren't, including myself, we weren't able to ever, benefit from them. We lost everything, even though these businesses and these assets weren't lost. And it really was because of a bad board and bad governance. But man, it was a story that definitely Hollywood would go crazy on. In China, you've heard about, these billionaire big company leaders getting kind of disappearing for months on end. That happened at NQ Mobile. It just, the crazy stories were insane. And I kind of had a front row seat at it all. And it ultimately led to a place where, when I saw that the board was unwilling to do what was necessary to let the company move forward, I had to blow the whistle, and I did everything internally that I could. But I ultimately had to go externally, which included public shareholders. It included the New York Stock Exchange. It included the auditors, even, with the SEC, and doing everything that I could to try and stop it. Wasn't successful, but it was just an intense period of time.
And how was this? These experiences, I guess you went through very rare. How was it like? How did you feel? How was it? Your family reaction? How were your days? How was this period? And how do you recover from that?
Yeah, it was extremely difficult and trying. And again, I think a lot of business owners and entrepreneurs can relate to moments where they feel the weight of the world, right? The pressure of making payroll, or the pressure of surviving or not surviving, or looking at complete failure or not. I think many entrepreneurs can feel that. But while I was at NQ Mobile, it was basically an all-out war for about 3 or 4 years to try and get through the situation, to try and both correct internal people and individuals and get them out of places they needed to, correcting decisions, working with obviously the public regulators. It was intense. The family felt the pressure of it. I felt the pressure of it. It really helped me. And again, I think I'll talk about Leadership Orbit, this book that I wrote. The concepts and the convictions that I have that kind of went into this concept of Leadership Orbit really were crystallized in this fire, because I was in a fire. It was a daily fire. And, there were moments when I couldn't see my way through. I had no idea what the next step looked like, including, keep in mind, I was an investor in this company first. I wasn't just an employee that was working for a company. I had invested my money and eventually had my entire financial savings and wealth tied up in this because I believed in it so much. And so not only was the stress of the job itself and seeing through intense, but I had my wealth in it. right? I was all in. And so thinking about, not seeing a way through, knowing that you had everything in it, invested in it, that creates some demons, some mental demons that you got to wrestle through. But again, it led to kind of my definition of what thriving looks like. And it led to this whole concept of leadership orbit, which I'm passionate about. And obviously ended up writing a book about, and MBL Partners is really based on. And it's really exciting to be a part of it. And it really was because of this difficult moment. And I would just say, to your viewers and listeners who are entrepreneurs, who are business builders, we all have our own versions of this, right? And different scales, different levels, different sizes. But anyone that's started a business or running a business or buying a business, they all know exactly what I'm talking about. This I don't know how to see the next day. And how do you have the grit and the determination and the hope and the optimism to keep moving forward in despite that? That's what the real entrepreneurs and the lasting kind of business builders are able to garner inside of them.
One last question. If you were advising an investor evaluating like a extremely high growth company today, what red flags would you warn them about based on your NQ mobile experience?
Yeah, I would say that there's a couple of red flags. Number one, I think if the governance of the company, and again, there's, public companies have a certain governance standard. Individual, small, little business companies have their own governance standards. But if the governance of the company is set up in a way that either you don't understand it, or when everything is flying around, that it prevents actionable change against a founder. Like if the founder can't be changed even for bad boy acts, run away. Like governance matters at a level 10, and understanding the governance triggers in whatever you're investing in, and what happens when things go wrong, or what happens if the unthinkable happens. Like having the understanding of the governance mechanism to making change, that's critical. And if you don't understand it or it doesn't exist, that's a big red flag that I would sort through. So that would be one thing. The second thing that I think is important is, at the end of the day, being able to really understand the cash movements of a business, where cash comes from, where cash goes, still rules the day at all sizes, whether it's a startup or whether it's a big, huge company. If you're investing in or looking to build or looking to join a company, you better have really good conviction on cash flows and where the cash comes from and where the cash goes and who has controls over the cash.
And you even think of like a bank accounts. You see like where it goes, what's going on, all the details.
Yeah, 100%. Yep. I think, again, I have MBL Partners. One of our core theses is businesses there's a commonality around business of all sizes, from small, medium businesses up to big, even public businesses. Cash management is poorly done across the board. This is a common problem. Business owners don't either pay attention to it, don't know it, or they're managing it based on like a balance. They check their balance, but they don't actually know how and what and where it's going and how it's going and how to move it. Cash flow management and cash management is something that we really believe in deeply. And at MBL Partners, anytime we want to get involved in a company, getting down to a basic cash management system is critical. And that's one of our core theses. But again, investing in businesses, one of the red flags is if you don't understand it or can't understand cash movements in an organization, that's a red flag that you should sort through.
Okay, so let's talk about MBL Partners, the HoldCo model, investment philosophy. What was the core thesis behind starting MBL Partners based on all the previous experience you had? And what problem were you solving and what exactly are you doing?
Yeah, our definition of the word thrive is central to like our thesis behind MBL Partners. We believe that like people have a misconception or a perception issue around what it actually means to thrive. I think people think of thriving, they think of, I'm in a corner office, I've got a big fund, I've got all this money, I've got all these degrees, I've got titles, and our definition of thriving is fundamentally different from that. We actually believe thriving is defined in the following. It's a mental, emotional, and physical state of advancing and progressing with purpose. And so taking that definition, that has nothing to do with your circumstances. It has nothing to do with whether business is going well or not well. It actually has to do with, do you have the capacity, physical, emotional, mental capacity to progress? And so when we launched MBL Partners, we wanted to set up effectively an investment platform that begins with our own capital first, but then we bring in other capital. We have partner capital that we bring in, but it always starts with us first. Can we invest behind? And again, when I talk about investing behind, that isn't always dollars, right? Because there's ways you can invest. You can invest intellectual capital, you can invest human capital, or you can invest financial capital. But if we want to invest behind something, we want to make sure that that something, which is either a leader or a person or an organization, right, actually is in the place where they can advance and progress. And we believe that's what it's all about. And if you can gain a lot of excitement around just progressing, man, we think you can thrive in all circumstances, and we want to be behind that. So we decided to kind of form MBL Partners. It's a partner in mine. And we believe that there are some common issues across businesses that we have a specific playbook for. And at the beginning, we can help advise companies or individual leaders on kind of assessing their problems, these common problems, and we can give them advice, give them a playbook to address them. In that process, when we gain a lot of excitement or enthusiasm about them and or what they're doing, man, we want to figure out a way to invest behind them or build behind them or start businesses behind them. And so MBL Partners is born out of that. We believe there's some common problems, and very specifically, right now, our working investment thesis is very simple. It's actually not complicated at all. We believe that the last 40 years has been marked by interest rates going one direction and one direction only, down, access to liquidity going up and actually becoming like infinite, right? And so companies' ability to gain capital and cash, whether through debt, equity, or financing, has really been limitless over the last 40 years. Well, we believe that changed. So we believe over the last couple of years, both the access to and availability of capital is being capped, right? Is no longer unlimited. And obviously the cost of that capital is now starting to go up. Again, we're not smart enough to know how far up that will go, but our thesis is it's not going back to zero. So it's going to remain elevated and potentially further elevated from here. And then the access to capital, effectively the spigot of monetary easing, quantitative easing is shut down. It's again, whether people get more accommodative, less accommodative, or all that, like, again, we'll let the macroeconomists deal with that. But we just believe that the access to capital is going to be more fixed and finite. Therefore, companies have to get really smart about how they access cash. And we believe that the companies that can figure out how to grow and expand by using their own generated cash flow, those are the ones that are going to stick around and increase in value, as opposed to those companies that just need to refinance either through debt and or equity raises. Those companies are going to have a difficult time. So based on that very simple thesis, we have a playbook to help companies, one, figure out how to establish where they're at in that with cash flow, two, how to manage it, and then three, how to grow and expand and scale. And MBL Partners is doing that. We're starting businesses. We are investing behind businesses, and we're advising businesses all the same, and doing some pretty interesting things across many different sectors. I mean, everything from healthcare to real estate to oil and gas to technology. And it really is all centered on that commonality and that common kind of thesis and our specific playbook for that.
Asking again, where does this thesis coming from? Because it's extremely smart way to do things. Lots of funds, they just, obviously they're not just capital, but first of all, they focus on the capital and then they start advising and do all sorts of other things. You do it in an exact opposite way. I'm asking this because I'm just doing a research on one extremely smart private market investor and he said that in his opinion, the best businesses are like Lazard, for example. They provided the financial services, they provide the advice, and they see like they have obviously they doing it on a huge level, but they're so good at what they do that companies are willing to pay millions. So it's extremely asset-light business. At the same time, they start making those investments into extremely good cases. So coming back to this question, like, how did you come up with this idea of starting with the advice and then moving forward with the capital, if needed?
There's two reasons. One of them is more about what gets me and my partner going, like what drives us. And the second one is selfishly what makes the most sense for us. So let me just start with the first. The reason why we go about it this way is very simple. Our mission is to help organizations thrive. Sometimes that means we get involved. Sometimes that means we can give advice, but we truly want to help people thrive. We have an abundance. Like, we really believe that it's not a dog eat dog world. We believe that if you help and provide value, it's going to come back to you, in greater amounts. And so that's how we approach life. And it's why we do that. The selfish part about that, though, is while we're providing this valuable advice and advisory and like, hey, here's a playbook and here's that, we're actually getting really smart on the industry or the business. And we actually are seeing how the business owner or the leaders of the company are susceptible to change and to like this concept of progression. And so before we even like directly invest in behind or build with someone, we're kind of getting a front row seat at how they act. And we gain our own, and then it gives us a lot of confidence and conviction that when we get excited and when we feel that connection and when our thesis aligns with how they actually want to move forward, man, why wouldn't we want to invest behind them then? And so it starts with our mission. We just truly want to help people thrive. And if we can help people thrive, we believe we're thriving. Mm-hmm. And then as we do that, we get a chance to really date, before we marry. And then that just gives us the opportunities. And by the way, the flip side is, it helps us get really smart about what we're doing before we actually are committed from a financial capital standpoint. So it's how we've worked it. It works out really well. And like I said, the thesis is, I don't think there's nothing genius about it. It's, to me, pretty common sense, but it's working really well.
What is your so-called cup of tea? Like, what type of customer, they come to you? What should be the situation when you feel like, okay, this is I can provide extreme amounts of value for them? Yeah,
I think that there's really three customers, right? Customer one is there's distress, there's stress and strain, and there's sand in the gears and they're clunky and like they're feeling it, but they don't really know what to do about it or why. That's customer number one. I've got this business, it's doing this thing, and I don't know why, but I feel like I have all these customers and all this, but like I'm strained. I'm like stressed out. I'm not making payroll, and like I don't really know. It's like I've got these pain points and I don't really know why. That's customer number one, because we can really look at a situation and we have a wide, range of, like, we've been in the trenches. We've seen lots of things from lots of different industries. And so we're able to come in and without emotion, really like say, hey, let's break things down and like, let's simplify things and let's actually pinpoint the source of the pain. Then we can start to worry about addressing it. Because I think oftentimes entrepreneurs and business owners and builders, they feel pain and they do stuff about it, but they don't have a lot of conviction that the source of the pain is what they think it is. They're just doing stuff, right? And they're working really hard at it, but they can't really pinpoint the issue. So that's customer number one. Customer number two is, hey, I've got a business or I've got an idea and I don't know how to like execute. I don't know how to like take my idea or my business to the next level, or I need help with this specific thing. And I need some like third party relationship help. It's just like someone that like just needs experience and relationships and key service provider calls. And like, they just need that. That's like the second kind of customer. And then customer number three is they might have a big business, right? They might have been in business for a long time and they're nearing the end or there's kind of a change, they're passing the baton to someone else and they really want to grow and scale. And as you know, running a business and scaling a business are two very different things. And again, we bring a level of expertise around, hey, if you want to take this to the next level, whether that's, hey, we're going from 1 to 10, or if that means we're going from 10 to 100, or if that means we're going from 100 to public, whatever, like, those require different skill sets and oftentimes different people. And that would be the third customer that would come to us. We've had the opportunity to take a number of different businesses in different sectors, like up the scale zone. And so the scaling, like from making a business into a platform, that's something we're pretty uniquely positioned to do. So you can see those three customers are very wide ranges, but those are kind of the three perfect kind of customers that say, man, MBL Partners can really help me.
And what is the process behind this? I mean, you described the business when there's lots of going on, customers coming in at the same time, maybe some issues with the payroll. That means that the CEO, the owner, if it's a small business, they're super busy with everything. So you come in and you start saying to them, you're pretty much like starting a due diligence. So they don't have time for that. So what's the process?
So everything begins and ends with us and our process. Everything begins and ends with building a cash budget. Okay. So we will come in and whether they as an individual or their teams have the capacity to follow our playbook and we work them and advise them, we do that. Or if they don't, like you said, there's circumstances where it's just like they don't even have the time, let alone the expertise. And so we'll bring our own team in. And either way, our process always begins and starts with, we're going to build a cash budget so we can actually see what's happening with cash. From a budget standpoint, we can look at where there's holes or where there's gaps, and we can see what are the cash needs, period. And that works from startup, like I said, all the way to companies that are like going public. They still need help with this like having a weekly cash budget. You may laugh at that or be surprised at that, but there are many public companies that are terrible at it too. But that's our process. It's not complicated. We have our own model templates and we have our own way of doing it. Sometimes others have their own way and we'll work with them. But like at the end of the day, we want to stare at, hey, built bottoms up, right? So not top down, not like, we're papering over some big, we're going to build bottoms up, get to unit economics, and build a bottoms-up cash budget that we can stare at and say, okay, here's what's happening. Now, once we know what's happening and we know what gaps or shortfalls we need to fill, then we can start to work on, okay, and how do we optimize it or make it better or make it sustainable? Remember, based on our third thesis, we believe all companies need to get to a cash flow sustainable place. We just do. That's our belief. There's going to be companies that will prove that wrong. That's fine. But we believe that companies need to get to generating cash flow from operations. And so we always begin and end with a cash budget. And we have our own version of it. Again, not overly complicated. It's not some whiz bang, rocket science thing. It's very basic. Tell me what cash is coming in this week. Tell me what cash is going out this week. Once you line that up for 52 weeks and you start to report on that weekly, magic starts to happen because you start to see things. It becomes obvious some of the things that can be fixed or improved or where there's waste or things like that. And that's how we do it.
So how do you build the deal flow? I mean, the funds, they have their brokers, they have their brand deals coming to them. How is it with you? Do you use your research skills from the old trading days to look at the companies which maybe have lots of tailwinds, lots of opportunity, but you see they're struggling? Obviously, it's very hard with those small private companies to get all the data. So how is the process behind this?
Look, we've been fortunate enough today, up to this point, to have way more deal flow coming from our existing investments and our existing advisory clients than we can handle. Now, we're scaling ourselves. And so obviously that won't always be the case. And we're building the engine to be able to take that in. But deal flow, it comes best from your own network and then obviously from those people that you're serving. Is there a better place to get the next deal than from someone that you just helped or you just invested behind or you just had an exit with? That's been the source of our deal flow. We haven't really expanded beyond that as of yet. That will change as we scale and grow. That will certainly change, but it's coming from our own group of founders, owners, builders that we've been supporting and helping directly. And as you know, every business owner and entrepreneur and fund manager, whatever, they all have their own set of networks and relationships. There's some overlap, but again, when you're dealing with the sector differences and expansion that we deal with, man, we have lots of different circles.
And when it comes to the ratio between those companies and the issues they're facing, is it oftentimes 0% organic growth type businesses, which they're just on the same level for the past, 10, 15 years, 5 years, they just same revenue, same profit, haven't been able to grow? Or these are the businesses, they come to you because the drive and all this part is those businesses which want to grow, they want to expand, they maybe would like to acquire a competitor or maybe even more like a roll-up strategy.
It's more the latter. Mm-hmm. It's more the growing is painful and help me overcome this pain so I can grow faster. That's more of what it is. Now, we certainly have some investments and some clients that have been much more stable. And they're, and those circumstances are more about, hey, I'm not the person to keep running this. Help us come up with a succession plan on those stable and boring businesses. But it's much more about the growth oriented folks.
And how do you think about the capital allocation across multiple businesses when it comes to this holding company model, or just focusing on this platform business by just investing into the same business and growing it? What have been your experience?
We love having an ever growing and expanding set of investments across sectors. We love the diversity of it. Again, many of these businesses have common needs and common problems. And so we're able to build businesses to serve those common needs and common problem, which obviously we can then utilize and is super valuable and helpful to all of our investments. But we like having multiple investments, ownership positions, stakes in lots of different businesses. Remember, we're really building, again, everyone throws around the word HoldCo, but we're building what we like to think about is a platform to help our future generations thrive. And so it's a set of businesses, it's a set of assets, it's a set of investments that ultimately can be used by them and that can be learned by them to continue to further their desires and their growth. Future generations, whether that's our partners that carry this forward after we're long gone, whether that's our family members, just the whole thing. And so we love having a diversified set of assets and investments.
You're not doing it alone. What about the talent? Who are the people you're doing it together? Who are the people you are looking for? Because you provide extreme levels of value for those who work with you, and you're hoping to do that in the future as well. So who are those special people you're doing it with?
Yeah, Mick, it's great. I could spend the whole podcast talking about the people that I'm doing it with, because working with some awesome people that have shared mission and values and enthusiasm, and obviously they're smart and they're driven and they hustle and they've got lots of grit. But the one thing that I would say that I would be remiss not to mention here is we're also doing it with people that you or I would otherwise never think about in this regard. And let me be very specific. We actually believe that, I believe that all of us individuals, right, have just unlimited potential. And obviously in today's world with the access to content and information and training and tools and technology and AI, everyone can become like a superhero. And we actually do work with a company called Solvo Global that they're in the business of bringing global talent to us and to our businesses. And they're all over the world. And these are young, sometimes not young. They have amazing attitudes. They wouldn't have any chance if you were just looking at their resume. But you know what? They're super smart. They're dedicated. They're motivated. They love working on these things. They're mission driven. And it's okay if they're sitting in Argentina or Kenya or the Philippines or all that. So we definitely are using a global network of individuals to do what we do. And we love that. I think I say this all the time. If you in what you're doing daily, if you're not actually trying to replace yourself with a process and a system, you're actually not doing a good job, right? You should be working to replace yourself in all of your roles and all of your functions. And I believe that. So when you ask that question about who we're doing it with, man, we've got some awesome people locally, but we've got some awesome people globally. And we think everyone can play a role, everyone.
When it comes to MBL Partners today, what about the portfolio, if you don't mind sharing? Like what type of industries, what are you extremely excited about, what you're maybe less excited about?
Yeah. So let me give you a couple of things. One, we are focused a lot right now on, we started a healthcare MSO platform called Allevio. And we are in the process. We've made a number of acquisitions, and we're going to make more acquisitions of podiatrist practices and lower extremity healthcare provider practices. And Allevio is really the platform that can both acquire, build, and then run those businesses on behalf of the doctors. Man, we're super excited about this. We think that this very boring market is actually very exciting. There's not really the big private equity guys looking at it yet, which we like. They're too focused on the dental roll-ups and the med spa roll-ups. We're in podiatry and like clipping toenails and doing that kind of stuff. But this platform, and it's not even a year old. We started it last July. It's already in the top 10 largest in the United States. Growing very fast. And we got big plans for that. So that's something that we're very excited about and doing. We've done some investments in some of the, I'm going to call it the service centers that we think all businesses need. Again, cash management I've talked about. So we have an investment in a bookkeeping, accounting, CPA, tax services company that we think could grow a lot. And so we're excited about that one. digital marketing. Again, all companies need sales. They need presence. They need digital marketing. Most companies have like that whole world scares them. They hire some third party group and they actually have no idea what the money's going for or what their return is on that. So we started a company that does that in a really awesome way. So we're excited about that. We've done some direct oil and gas drill co-investing in a platform that we have that we think is interesting, that we're doing uniquely and kind of differently from others. And so we're excited. So gives you an idea. We're kind of all over. We've got some boring, CPA bookkeeping type things to oil and gas, hard asset type things to, again, this healthcare, platform roll up that we're working on. And then we're also working. We don't have yet investments, financial investments in there, but we're also working with financial advisors. We're working with, sales organizations in, solar. So we're doing some cool things with some cool businesses that will likely lead to some other investment opportunities.
As you started with your own money, what is the strategy there? Is it to just buy and build to hold, or buy and build to sell when a larger PE firm comes, or what's the idea behind this?
Our philosophy is to buy and build to hold. And if the business is cash flow and self-sustainable from its own cash flows from operations and can be growing, those are business. Why would you ever sell those businesses? Unless someone's going to come around and pay some stupid number for, which happens. But we go into things thinking that we're just going to continue to hold that business for generations. Doesn't always happen. There's always reasons or opportunities to sell, which we do. But that's not how we go into it. We actually go into it saying, if this was my only business and I had to work at this business, would I do it? And then how would I do it? And that's how we kind of frame our thinking about, what we're doing. So like for Alivio, it could very well be very attractive to a private equity group at some point. That's not why we're building it. It's not how we're thinking about it. We're actually investing to think, hey, this is a platform that we could own for decades. But that's how we go about it.
And what are your thoughts when it comes to outside capital? I mean, if you're buying good businesses, you grow them well, you become very attractive for many LPs. So what's your take there?
Man, in my life and in my experience, I've kind of been involved in all forms of outside capital, from funds that I've started, funds that I've managed, funds that I've co-invested in, to co-investments, to private capital, to high net worth, and kind of fundless sponsor models, to big kind of Blackstone type JV models. So and obviously on the public side. So I've seen kind of all the sources of capital. There's a place for all of it. And there are circumstances where all of them make sense. My favorite personal world, that is my preference, not exclusive preference, but my general preference is, I like investing first with my own money. And then I like bringing in a small, close group of other capital partners that, understand the mission, understand the alignment, and that are basically co-investing with me. Now, sometimes things get so big and so fast that world doesn't work, right? You've got to go to bigger sources, which require other sorts of things. And so you need a fund or you need whatever. So I get that, but that's my favorite world, is to kind of be a fundless sponsor and to have a network of private, high net worth, family office type capital that just wants to build businesses with you and shares in your beliefs. That's the world I like. Funds, you get into time constraints, IRR, return constraints that sometimes make the building of the business part like cockeyed, right? It sometimes makes those decisions tilted towards making sure you hit some minimum IRR or you have some end of life thing. And I don't love being constrained. I like to be natural. I like organic and natural things, and just making the best decision possible, no matter what, as opposed to being forced to based on some fund dynamic. But again, sometimes you have to do that. But that's my favorite world.
You look healthy, happy, excited. How has definition of success changed? I mean, you maybe 15 years ago and you today, because you probably have all the skills and capabilities, and if you again provide great results with your current portfolio companies, it would not be the hardest thing in this world for you to raise like a huge fund and to do it on this level and maybe institutional capital. So when it comes to defining success, what would you say?
Yeah. Look, I've seen my fair share of success, and I've seen my fair share of epic failure and destruction, right? And so through both ends of those extremes, what I've found is you don't like happiness or like having some fulfillment actually doesn't come as a result of avoiding a destruction. It also doesn't come as a result of like checking some success box. I actually believe that the destination fallacy is a problem. It's a pandemic. People are so focused on reaching some destination and thinking that that's going to like give them joy and happiness. And I believe that it's actually the journey. I know that's something you hear oftentimes, but I just believe in it. The process, again, go back to my definition of thriving. It's that process that's where you find joy and meaning. And so I purposely just enjoy the grind. And I feel like I'm there. Like I'm not waiting for some destination to like celebrate. I try and celebrate the moments that we're in. And the growing that we're in. And again, you have to be grateful when you do have some wins and you do have some success, but you also have to be cool and level-headed when you're going through a really hard drought period or, bad period. Because you're going to have both. And if you can kind of keep this hopeful, optimistic, energetic attitude and aura about you, no matter if you're at a high time or a low time, man, I think you just attract many more opportunities. And so that's how I define that. Look, I have big plans. I have big goals. I have big aspirations, but I feel like I'm living the dream every day, working on it, as opposed to, wait till I get there.
Man, you sent me a book, but it's in a local post office, and I paid my taxes and all that, but they couldn't send it to me today. I really wanted to go through it as quickly as possible before this call. I couldn't do that. So, Leadership Orbit. I mean, I ask at the end of every podcast, like, what is people's favorite book? And I've heard twice, like, the one you write. So, what's the story behind this, and what should I expect reading this book?
I initially thought I was going to write a book about the NQ Mobile, like drama, whistleblowing, the whole thing, and it's a story worth telling because it's truly wild and crazy. But as I like found myself thriving right after, in the moments and the years after that financial ruin, right? That disaster for me and so many other people that I cared about. I started to get this concept of leadership orbit, and I decided to write a book on it. But it really, it hopefully helps redefine what it means to be a leader. It hopefully opens up people's belief in themselves that they can make a difference. And the concept of thriving in this, orbiting view of like, look, we're going to go around some center of gravity constantly. And can we gain momentum that sustains us sometimes in really fun moments and during the hard moments, but just keep going. And then once we do that for ourselves, can we then lift those around us into that place? Leadership Orbit's all about that. Yes, there's lots of business lessons and stories, my own personal business stories in there that are interesting to me and hopefully to you. But it's really about how do you get yourself into this self-sustainable orbit, and then how do you help others get there? And I really believe that many of our current life's challenges, of which there are many, they're going to be overcome by you and me. They're going to be overcome by those that get into this leadership orbit and then help others get there. And that's why I wrote the book and why I'm so passionate about it. And I hope you enjoy it.
I will go through it 100%. Not too many people are sending me books personally, so thanks a lot for doing this.
No problem.
2030. What about MBL Partners? What's your goal or wish, or what's on your to-do list where you want to be?
In 5 years from now, or a little less than 5 years from now, I hope that MBL Partners is a household name, not for the institutions, although they'll be involved, but the household name for any entrepreneur, business builder, business owner, investor, and even, the worker bees. And it can become a household name and a source for defining what it means to thrive and providing an actionable and doable playbook that helps you as a person, but then also you as a leader, help your organization get to. And that's what I hope. I hope it impacts many people. I hope it becomes a source of opportunity and a source of support and advice. And like I said before, a source of the capital, human, intellectual, and financial capital, right, that companies need. And I believe that. And I think in 5 years' time, we'll have many wins, we'll have many losses, but we'll have an army of people that say, you know what, MBL Partners helps, and they really provide value, and you can get that help in many different ways.
Do you think you could start this business 10, 15 years ago, or it was perfect just starting it now? Because I'm asking because lots of young people, myself as well, we want things fast.
Yes.
So asking.
So I think that 10 years ago, I could have started the investment part of it. Mm-hmm. But really having the playbook and the advisory part of it, which really feeds the investment part of it, and understanding how to build the structure, the governance and legal structure to do this over and over again across many sectors, that's born out of, the years of the decades of experience that I've gone through with all the many different businesses that I've been involved with, that I've started, that I've been at, that I've worked for, et cetera. And so the answer is, MBL in its current form, no, you can't shortchange that experience. If it were just about, oh, hey, let's go invest in a business or two, or hey, let's build a HoldCo, sure, we could have started it. I don't think it would be as powerful, as impactful as it is today.
Okay, it's so excited. I really want to see how it goes, because I think it's a extremely smart way of building an investment firm, and a bit sad that I can't do it now because I don't have all the experience. But awesome.
Well, never say never. I'm never going to say never, but we would certainly love to help you when you're ready.
Okay, so last one: best investment advice you've ever got.
Best investment advice I ever have received. It's very simple. It's actually keep it simple, stupid. And it's just focus on cash. Understand cash. Know cash. That, like, whether it's a big investment, a small investment, or your investment in yourself, just understand the capitalization and what it's going to take, and the sources and uses of cash. That's my best investment advice. Stick to the simple basics of cash. Cash is king, and the source of cash is the kingdom.
Matthew, again, I really enjoyed this conversation. Big fan of you. Thanks a lot for doing this, and happy to talk next year at the same time, if you're willing to do that.
Absolutely. Thanks so much for having me on, and best of luck, and keep me posted on your doings.